You can't escape it, right? The AI boom is everywhere. We're seeing absolutely record-breaking revenues, stocks soaring. It seems totally unstoppable. But what if? What if some of that incredible growth isn't quite what it seems? Today, we're digging into a really critical question about the financial engine driving this whole revolution, and whether it's built on a solid foundation, or maybe, just maybe, it's a clever shell game.
So let's just put the question right out there. Is this boom built on real, solid, widespread demand? Or is it more of a high-tech shell game, just a big circle of money creating the illusion of growth? To really get our heads around how that could even be possible, we need to start with a really simple but powerful idea.
And that idea is something people are calling the $20 meme. It sounds funny, but it's actually the perfect analogy for the complicated financial loop we're going to investigate. I promise, once you get this, the entire argument about the AI boom just clicks.
Okay, so here's how it works. It's super simple. Imagine I just hand you a $20 bill. Then you immediately take that exact same bill and use it to buy something from me. On my company's books, what do I see? $20 in revenue. Woohoo! But did my business actually grow? Did any new money come in, or did we just pass the same $20 back and forth? That question right there, that's at the heart of everything we're talking about today.
Now, this isn't just some random idea from the internet. This concept is the basis of a very serious warning from a very famous skeptic. We're talking about Michael Burry. Yeah, the guy made famous in The Big Short for calling the 2008 financial crisis. And he thinks he's seeing a similar pattern happening right now in AI.
And here is his core claim. It's an absolute bombshell. He says dealers are funding their own customers. He has a name for it: synthetic growth. The accusation is that the biggest sellers of AI tech are pretty much handing their customers cash just so those same customers can turn around and buy their products. I mean, that is a powerful, powerful claim.
So let's be super clear on what synthetic growth actually means. On paper, it looks like totally real revenue, but the key is that it's generated in a closed loop. Company A invests a bunch of money in Company B. Company B then immediately uses that investment money to buy services from, you guessed it, Company A. It's the $20 meme, but we're talking about billions of dollars and some of the biggest names in the entire tech industry.
Okay, so that's the theory. But is that all it is, a theory? To find out, we have to do what you always do. We have to follow the money and see if we can spot this synthetic growth happening out in the wild.
And look, we are not talking about small startups here. These allegations of circular financing involve some of the absolute titans of tech. Nvidia, the undisputed king of AI chips. OpenAI, the folks behind ChatGPT. And Oracle, the massive enterprise software giant.
So here is how this whole financial circle allegedly works. Step 1, a tech giant, let's use Oracle as the example, makes a huge investment in a hot AI startup. Step 2, that startup takes a big chunk of that new cash and uses it to buy the one thing they absolutely need, hardware like GPUs from Nvidia. Step 3, they also need a massive cloud platform to run everything, so they spend another huge chunk on cloud services, often from the very same company that just invested in them, Oracle. And poof, just like that, the original investor's revenue gets a giant boost fueled by its own investment cash. This helps their stock price and creates this public perception of unstoppable AI leadership.
Okay, so if this money circle is a real thing, it brings up a huge question. How can we tell the difference between this synthetic growth and genuine, real-world organic demand? To do that, first we need to know what real growth actually looks like.
And this slide illustrates the difference perfectly. On one side, you have organic growth. This is what you want. It's when thousands of different companies, big and small, all independently decide your product is awesome and pay for it with their own money. It's real, it's diversified demand. Synthetic growth, on the other hand, is when that demand is all concentrated in a tiny self-funded circle. So how do we find a decent benchmark for that real organic demand? Well, one of the best places to look is the broader cloud market. Think about companies like Amazon's AWS and Google Cloud. They serve millions of businesses all over the world. Their growth rates can give us a pretty solid pulse check on the actual underlying health of the digital economy. And this is where the big red flag pops up. On one hand, we see AI-related revenues just shooting to the moon, explosive growth. But at the exact same time, the organic growth in the broader cloud market, our benchmark for real demand from guys like AWS and Google, has actually been slowing down. That is the disconnect that has skeptics so worried. Why would one tiny piece of the market be absolutely exploding while the rest of it is cooling off?
All right, so we've walked through the theory, we've followed the money, we've looked at the data. What does this all add up to? Let's connect the dots here.
So here's the bottom line. We know for a fact that a mind-boggling amount of money is pouring into AI. We have a credible allegation that some of this money is just flowing in a circle, creating what's called synthetic growth. This process can make demand look way bigger than it actually is, and it stands in really sharp contrast to the slowing organic growth we're seeing across the rest of the tech world.
Which leaves us with the ultimate multi-billion-dollar question. Is this all just a financial house of cards? Something that's destined to collapse once the investment money stops flowing in circles? Or is this just the necessary, messy, and super expensive way that a truly revolutionary technology gets built? You know, the kind of fake-it-till-you-make-it investment that's needed to bootstrap the entire future? Right now, the answer isn't clear. But asking the question is more important than ever.